Good morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. Thanks for visiting today. Can I please get a screen and audio check in YouTube and the Bookmap Discord Trader Lab community? Thank you, Lee. Thanks, Stephen. Good to get a response. Morning, everybody. This is Trader Lab. I stream live Monday through Friday, 11:30 to 1 p. Eastern Standard Time. The stream's about integrating Bookmap order flow tools with auction market theory using a volume profile in the intraday developing time frame. I'm going to remind everyone there's a library of webinars on this process that are available at no cost in the Bookmap Discord Trader Lab community, as well as structured trades that a 60 PDF structured trade portfolio you can download so you can see what's going on here and potentially reverse engineer some of these. And the other part of this is understanding market mechanics, how the market works, why it does what it does, how at times with a vetted trade plan you can get in alignment with it. The business of trading is very much a gaming business. It's statistically based. It is not a video game. I mean, you can entertain yourself, but longevity potential with that approach is not very high. So what most traders do who are seeking longevity is really approach this like a business. One of the things we have to be very careful about in trading is the dopamine fix, the action, the need for the bump, the endorphins. This is really a problem for humans, if you will. Computers don't have that problem. You know, the machines are not wired the way we are. So many retail traders in the course of their development, and it's not that you can't develop the ability to, shall we say, bob and weave with the market, you know, but there's different things about the market. The primary element, I think, is understanding something called context. There are just days in the market where it's going to kind of slosh both sides. There's other days in the market like today, which is October 31st, Halloween 2024, and kind of a scary market, right? I think the goblins, at least the short goblins, are out in force. So it's not scary if you have a trade plan. However, you do need to understand the difference between a walk in the park and today. And today's one of those days that becomes an outlier. And for trading in this business, as far as I've experienced it, you really need to adjust what you do based on the condition of the market, not on your need for action. We have this conversation, by the way, all the time in the Trader Lab, because every trader can do whatever they want to do and wherever they have a statistical edge. But what traders who are developing may understand that there are different conditions where that edge is not going to exist, and that they're going to miss opportunities to be in alignment. So these are just things to be considering. And again, past performance not indicative of future results. Everybody's outcome will vary. General disclosure, all Bookmap Ltd materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure, trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. And if you guys remember, yesterday, we actually had a pretty terrific day yesterday. And I'm going to talk about it a little bit, but before I do, actually, yesterday is very important. I want to remind everybody that there's a link in the bottom of YouTube. If you're new here, thanks for visiting. And there's 60 PDFs of these trades that I'm going to be discussing. This is not complete by any means, and order flow, all kinds of different stuff that you might find interesting. And a lot of these structured trades are based on elements that are in here. So it's not inclusive. It's not a trading course. This is from 2020. Traders, I only put these together because traders were asking me, and Bookmap asked me if I would share some of this. So I did. And then over time, basically, Bookmap said, would you mind, sharing this further? So that's why I stream. But there is no cost for this. So Bookmap is very generous to make this available to everyone, even if you're not currently a Bookmap subscriber, to take advantage of education that I think is really amazing. Because most of the time, if you want education, you end up joining a chat room and getting your checkbook out. And that, of course, is fine if you can derive a benefit. But unless you really vet and know somebody and know that they're credible, you may not want to do that. Why? Because you've already done it, haven't you? And how's that worked out for you? I know the old saying is, I got something out of it. Yeah, sure. Meanwhile, they got something out of it too, your dollars. And if it doesn't change your outcome, then you have to be thinking about it. Now let's talk about yesterday. I got to go back to yesterday because it's all about today. If you remember yesterday, we were looking for selling first and then a return to here and here. This was the target yesterday. And it turns out it was yesterday's high. Now, there's no clairvoyance in any of this, so don't think anybody can predict anything. Take that off the table. We're not in the prediction business. We're in the business of maybe. And there's another piece to this. Well, I had 2 levels yesterday, and I've actually posted this and made it part of the library. Thanks, Ned, for curating the library. Much appreciated. I had 2 levels for longs yesterday, and this was in the trade plan. 58.60 right here to get long, and I took a long in the morning, took a stop, okay? Actually, got a scale, took a stop. So when I say take a stop, it means I was out of the trade. Doesn't matter. Then the next area was 45. 45, which was right here. And this is now yesterday's low was made after, at the end of the day, I believe. This was the long. So yesterday for me was only longs, and it was long back to yesterday's high because there was an 85% probability-ish, and you have to vet statistics for yourself, and then to there. That was it. So that was my day, 45 to there, and trades in between on the rotation, separate issue. Now, with that in mind, what would we anticipate today? Stay in that area because this is the fair price in that from October 9th to yesterday was a big consolidation, and all these levels are coming off of that. This is what the volume profile is about. It's showing us the volume and the participant behavior, which we try to determine what it means. But at the end of the day, we did sell off, right? And here's the settlement. So now let's go a little further. It gets more interesting now. So we had reports yesterday, and one of our members keeps this advised. Actually, several of them do, but Slaughter always talks about earnings, and Boomer posts charts and reports. So we got a team effort, by the way, in the Trader Lab. It's not one, it's a team, and that's what makes the Trader Lab different. We're all working together to support each other. But here's the key. Yesterday's low is here. The ETH opens, we test yesterday's low, and this is the ETH high. And what happens? South of the border, what else happens? We gap. In other words, we open in a gap under yesterday's settlement outside of yesterday's range. Okay, what does that mean? Rejection. What did we do yesterday? 45 was the low. What is the high in the ETH? 45. This is where the light bulb ought to go off if you understand market mechanics. And that is saying what was support is now resistance. And then, of course, yesterday's low. So remember, the longs were from here yesterday. And then we made a new low at the end of the day, settlement here. So can you see the logic that if this was support for the longs, and now the longs have their stops under 45, and at the end of the day, we come under here, then we open and we continue lower. So that's the first piece. Now, let's continue. And by the way, if you have questions, please post them. So we reject yesterday's this whole area from October 9th is now in jeopardy, And based on the fact of what we didn't do, in other words, we didn't hold that higher time frame level, which is what we were which was our high volume area. In other words, retail. High volume means retail. We rejected this. Then we tried here. See you later. Under 45. I'll catch you next time I'm back here, whenever that might be, and who knows. And now gap. So this changes everything. And let me give you some ideas. What does it mean? Where's our targets coming down? Gotta get this for you. Here, 77.50 is a target, higher time frame. This should not be on here. Wait, 57. Well, guys, these are some stale levels, aren't they? Yeah, these should not be here. Sorry, guys. This is my streaming computer, not my trading platform. So some of this stuff, let me just check. I'm sorry. Gotta get, just make sure I get some of this stuff off here if it's not appropriate. 57.80. Yeah, okay. This can go, this can go. So this is an over-under right here. This is a high volume area in the lower intermediate time frame. This is a target. If I get below here, I'm going for 60. These are on the price map. And these are all levels that are created from the last time we were here. I should have 33. Yeah, 33. Let me just make sure I've got the right level here. These are a little off. I haven't adjusted them. Okay. 60. Okay. Oh, sorry, guys. Okay. So let's get into the RTH open. Now, in a gap like this, there's a couple possibilities, of course. However, the thing that traders need to understand is we are rejecting everything above us from October 9th. And we're coming out to the outside edge. Everybody who's long, in all the longs in here, are now getting thrown under the bus. And here's the possibilities. We have the ETH low. We have the RTH open. We have what's called the overnight volume point of control. Highest volume in the ETH. So this is the ETH over here at the moment. Same thing that's over there. So this is our retail price. ETH low is here. But we have to be conscious that we are gapping out of there's an important condition taking place. This is called context. So for me, I'm certainly not interested in getting long. And of course, I don't know what's going to happen. So write that down. It's all random. But what I want to do is find an area for a long. So I'm going to look on the RTH open for opportunity to get short. Now, this is called developing volume point of control. This is very important. This is where the retail price is. In other words, the yellow line represents high volume. And on the RTH open, it resets to 0. So there's no volume, and then we start counting volume. So I'm looking now at order flow and volume. And this is really what the volume profile is all about. So let's look very closely. Now, what I'm showing you right here is an advanced process. And if you come to Trader Lab, you can learn this. But if you trade this, you're going to have a problem because it is fast. And most of us, it's like having unconscious competence. And that's exactly what it is. You have to be able to, your brain has to be able to recognize this and interpret it. And when we start out in anything, we're incompetent. Then we hopefully eventually get conscious competence. That means you have to go, what's this? And you're processing it. And then there's subconscious competence, or unconscious competence, where you're just seeing it and you're already behaving because you're not translating. It's like speaking a language. Okay. This is the language of the market. So if this is too high, and I call them a variable high volume node, and I leave it, what it is saying is, and now this starts at 0, don't forget. On the open, I have what? This is before the open. Sellers are here, Passive sellers are here. Passive sellers are here. And I don't know. Sellers, volume. Now, the possibility is the following. Since we're going down in the ETH, we can squeeze up, or the selling can be massive, and this is our target. So let's see what we get. So either or, right? You got to be prepared for both. What do we get? This is called VPOC migration. This is and I did a specific webinar on this structure, this behavior, because I get so many questions about it. It is a advanced process. And many traders who come to Trader Lab start with this, and they will not going to have a good time because they have FOMO. What it is when you can work with this, you're teaching yourself context and microstructure. It's a place to study, replay, and develop that unconscious competence. It's like speed reading in a foreign language, okay? So what I do, I don't use any indicators. So what I'm really doing here is I'm just interpreting a language. I don't use an indicator because what's an indicator? It's an interpreter. So I've found that if I could read order flow, which is why I use order flow, I don't need an indicator. I'm seeing right here what's happening. Is it better for me to see behavior here and interpret it? This is too high. And then the volume is here. And this shifts down. That is too high. It shifts down again. That is too high. Notice where we're stopping. Too high? Too high? Sellers. You want to be short now, maybe, don't you? Where does it come back? The sellers are here. The sellers are here. The sellers are here. All I got is sellers. So if I get short on any of these, I've got to have my stop above the open. And of course I can get stopped out. You do know we all get stopped out, right? Let's watch. This is my first target. VPOC migration. Let's see if we see a consistent process in a random environment. Now, I'm taking my time, and I do it this way because what's the point of me streaming for you unless you can see something done the same way day after day after day in a random environment, which is the market? Something needs to be anchored. And I'll tell you what's anchored. Me. When I mean me, I mean my plan. Because my plan is the same. The behavior of the participants, random. What do casinos do? They play their games the same way. They are anchored. This is too high. So what do I get? Selling, up here, too high, teeth chattering, break away, retracement to where? Too high, variable high volume node, short, go in here. These are all shorts in Trader Lab, if that's your thing. Too high, I'm going to label this one. So this is the opening trade. And if you're in Trader Lab, I would suspect that many of you took this trade because it's a structured trade that I've shared along with, and there's many structured trades. And the idea of Trader Lab is that you take one trade and you make it your own. You understand it. You know when it's qualified. You know how to operate in this. So I'm going for this, don't forget. So that's a scale. Now what? South of the border. Now let's keep going here. Let's just follow the yellow brick road. Now here, right here, now I'm going for 60, I think it was. I can't remember anymore. This, I should say. 77.5 is my target. And then if I clear that, I've got 60 as another area. So right here, now let me explain. There's a change right here. So going down, having a wonderful time. I get VPOC migration. Now let's look at a change in behavior. Now I'm going to go into something here. It's called trading in fractals. And what it is multiple time frames as you think of it, right? Well, I don't use the clock, so for me, it's not a time frame, but we could use the term. What I'm doing is I'm trading structure and order flow. So for me, this is too high. I'm going to show. Do you see this yellow line? What is it telling us? The volume is moving lower. So think of it like shopping, retail price. But what happened in here? The same thing happened here. The volume in here is the same as the volume there. So this is a higher time frame. So when I go down in time frame, and let me show, I'm going to draw a little box around it. Now, I don't do this while I'm trading, but I'm doing it for you because this is stuff you already know. This is called a consolidation, isn't it? Let's look at it. Just going to isolate it. And here's what it looks like in volume. Too high, too low. And the high volume is there. What is high volume? It's the same as that, but this is a shorter time frame. So if I go chop, chop here, and I break low, that's a trigger in the Trader Lab. And this is now resistance, and this is resistance. So let's just watch. Now, when this drops down, it's the same as that. This is resistance. So I got resistance here and resistance here. I'm in multiple time frames, not to make you crazy. And there's the high volume, which comes from there, which is too high. So when I break below here, you know, I got the champagne on ice. And I'm thinking, great, we're just heading towards, you know, wherever, 77 and then, you know, maybe 60, no clue at that point. But watch the change. So remember where my resistance is. You see the behavior, how I'm coming back here, resistance. Now this is resistance, that is resistance. So what I'm looking for is continuation. Now I'm going to show you a change. There. As soon as this happens, now I'm above this seller and I've now come atop. When I rotate on top, it changes the configuration to something called mean reversion. By the way, my target on the short, just as an aside, is 33 that we're currently in at the moment. And I'll show you that one. So where's too high? Here, 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 here. So I get taken out here of my short, okay? Out. And it's like, what's going on? So I have resistance here, 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 here. And for all I know, that's that. What do I know? Except it's in the middle of nowhere. So now I've just got to be, you know, pay attention. Variable high volume node right here, right? That's why I've labeled these things. And there's more of them right up in here. So now the market's coming up, and what we're doing is a counter rotation, and we're squeezing the shorts out in this leg. Okay, including me. No problem. It's part of trading. But now let's look. I'm coming up here. Now, the rational thing to be thinking, which is what I was thinking, is we're going to take out the opening swing high, and then we got to see if that's just a squeeze, and then the sellers come back in, and then we continue down. That's my trade. But coming up here is a problem. Okay, so now I'm out, and I'm going, same thing you do. What's going on, right? And I know we can do anything. So, but I can't predict anything. I don't have the gift, you know, of clairvoyance. Not part of my thing. So I come up here, I see icebergs are selling, and I'm at a level, which is this. This is an important level. This is where I had my auction coming out of the gate, and it was our first shorts. Stops are above here. So right here, I'm not able to do anything here. But this is what I see. Let's look. So I'm coming up, and as far as I know, going to the moon. Watch. So what I'm seeing here, and I'm watching this thing, and I see absorption here. So that's the absorption detector. So I'm going, all right, that's reasonable. Market's going up. You're going to get sellers front running the opening swing high, right? And maybe selling iceberg. So I see the sellers are, and they're probably, I assume, here's the buy stop, stop an iceberg detector. Buy stops, buy stops. They're taking the other side, which is what icebergs, which are limit orders, often will do. So I'm still thinking we're just going to squeeze out here. But here's where it changes. Watch. Now, again, very difficult. So here, I'm in my area, and I'm looking for the pop. I see seller here. I'm under these buyers. Remember, I saw a seller here. I see nothing here. I get a buyer here. So here's what I've got. My buyers are here, passive, and my sellers are here. And I don't know if we're done on this side, but I know my buyers are here. Okay? And so watch the change. Sellers are here, passive sellers are here. So I've got my icebergs. And again, this is nothing. It's a what's going on moment. And there's my high volume. I'm going to draw a little box around this thing for you because I'm going to outline where the buyers and sellers are. And this is really how the market works. The market is an auction, and the auction takes place in all fractals and time frames. So this is its own little auction here. Sellers are here, buyers are here. The volume, which is the retail price, in other words, most of the volume is going through right here. That's what the volume profile shows us. Right there is high volume. So it's almost like I'm not paying that, yeah, but it's on sale, and we're sloshing here, and it's a battle between buyers and sellers. Now, I can either break high and continue to squeeze, or if I break low, take these buyers out down here, that means the sellers are now taking control, and this price is too high. So let's just watch. There's my break. That means these buyers are losing, and these sellers are in control. There's my aggressors. There's the delta, and I have my passive side here. Now we're just going to look at this. That's a short. Watch. 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 Where do we go? Can you see the short? This is very important. What happened here? Let's go back. High volume is here. Passive is there. Aggressor is here. It's a shootout at the OK Corral. Who's going to win? Clueless. Break low. Trader Lab, trigger. Test. Too high. Short. Now, stop goes here. And I usually give them 2 ticks or something. And you take a short. Now, we come back here. We get VPOC migration. We have to get below this. So watch the behavior. See if you can read it. And this is a variable high volume node. So this becomes support down here that we have to get through to go south of the border. So I'm going to label it variable high volume node. You'll notice I'm doing the same thing over and over and over and over. Why? Process. Why? Consistent. What's going on in here? Crazy. Random. Casinos. Same thing. Cards coming out of deck are random. How the gamblers play the cards are random. The games are anchored. Because over time, you play the game that has an edge. You extract the dollars from the other side. Not the next trade, not the next 5 trades, but over a random distribution of outcomes. Very hard for humans to do this. Very hard. So this is my short. But let's come back and look. Why did it come back here? What is this? This is the beauty of the auction. If you can speak the language, you know not what will happen, but what it says. Is my indicator telling me right here that I can lean on this to sell? I don't think so. Does yours? Mine never did. Does it tell me I can sell here with a limit, with a stop over here, and I have the Grand Canyon open below me? Does it tell me that? And if I get below here, notice how we paused here. This can go. I'm just going to take this off because we don't need it. And we're on the Pony Express train here. Let me turn this off and let's go see where it goes. Where's my next target? Hold on, I got to find it. Here. This is my next target. So the short is from here or here to there. Target. Now, when I come down here, there's a couple possibilities. And this is all structured trading. You can learn this in Trader Lab. And of course, you could be doing anything you want in this. What I have found for me, and it's just me, and I have been a high volume trader in the past, but I found that if I put a trade on and take a stop, it's going to be a couple of points. If I get a trade on who my targets, it's going to be more than a couple of points. 20, 25 point trades. That pays for my stops. If I get overactive in my risk and my range, in other words, my range is compressed, or if I'm trading counter trend, I don't have an edge in that in this condition. I can do it in other conditions, but not. And yesterday was only longs. Today is only shorts. And if I get a long, it's not a get long, it's a get out. It's a trade management process. So let's look. VPOC migration. Remember now, this is too low. This is now too high. I break under here. This becomes resistance. I've got the VWAP in the mid, and it's 9 a.m. in the morning. We've been going a half hour. It's a lovely thing. Where am I going? I'm going here. So this is my target. I get my target, and I'm going, wow, that's pretty cool. So now I get out here because I trade the targets, and now I'm going, well, this, if I can get back under here, I have another target down here. Where is it? Here, 60. So that's my next target. So let's watch. I return here. What is this? Isn't that the same as that? Here, let me come back. The short that was here, it was high volume. It was too high. I'm not paying that. I come down here. I break low. In the next time frame up. Now, I know this will confuse you. It confuses me. What the thing about confusion, let's redefine confusion. Uncertainty. Isn't that different? Notice the big icebergs buying down here. 1,000, big. So that creates the rotation. So when I get the rotation, I'm now going to come back and I'm going to look at my structure. And my structure is in here. Let me just try to get it on here. Microstructure again. There's my volume, I break. Now in the next fractal up, I've got this high volume. I break. So what do? I come back here. If I come back here, and my resistance is here in a fractal, and then in the developing daily time frame, this high volume might be too high, and I get a seller here, and I've got my risk out to here, I have an option to sell it or to do nothing. I'm just going to say. Let's watch. And we have some other structured trades I'll be showing you also. Now, in the Trader Lab, the objective in the Trader Lab is not to make you a whirling dervish. It's to help you build a business and to create sustainability and maybe a career path. And trading is not a video game, and it's not action. I mean, if you're hooked on dopamine, you're going to be a whirling dervish. And many traders don't understand the things that drive them to even make the choices. They just they'll never get it. And if it works, that's great. Most traders who do that don't sustain. So it's just something to think about. I always think about if someone is going to get really active, in other words, counter trend, trade long, to short, to this, to that. In a day like today, the dollars, the opportunities on the short side, not getting out of position, only trade management. But again, that's just based on my experience because I've done that myself. We all have done the same stuff. It's a matter of can you learn. So right here, too high, and again, too high, break. What is this? Isn't this a trigger? Chop, 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 break low. The volume is here, right? Let me just try to line it up for you right there. So let's try to isolate this. So I've got this isolated up here. I've got this now over here. So too high, break, pull back, break. So I've seen this guy was absorbed. That's why the delta didn't go anywhere. I don't know that, but I see this. I've now taken out these buyers. So this is how the delta and the order flow is helping me. My buyers are here. My sellers get below the buyers. How are these guys feeling? Not so good. And they might only be buy stops. That's why delta on its own doesn't give you the full picture. For me, this gives me the picture. I come back to the volume where the buyers were. The sellers are under the buyers. Let's remember that. I come back and the buyers cannot lift. I see the sellers. I make another low. That tells me, and I'm giving you something in order flow, that these buyers have a problem, and that there's passive sellers up here. Icebergs, of course, but others. Break, come back here. Too high. Break, where do I come? Here. This is the same basis as what I showed you at the high on that retracement. This sets up another short. Your stop would be up here or right above here against the volume in there. I'm not going to get, go too far with it. So now we have, and I'm below this, remember? That puts 60. So now I'm trading to 60, which is this. I think there's not a lot of trades, guys. I mean, the point of the trade is when you have a trade, you put it on and your goal. And notice where we come now. Let's remember 60. So my next target was 60. So I get out at 60. How many trades do I need here? Not many. Now there's another trade now, structured trade. And this is the last one that I put on. I'm still sitting in it now that I'm looking over here. Haven't even been paying attention to it. And it's called the IB continuation trade. Let me show it to you. And I posted this in the Trader Lab. If I can find a Trader Lab, where are you? Let me see if I can find this. Okay, because I want to show you 60 here. You'll see it. It's called the IB continuation trades. I don't know if I can find it here. Everybody does their own things. Here, guys, break below 60, tested and break below. So on the shorts, we can still retrace to the IB low, not a big deal. We'll still be shopping for shorts until things change. So far, has it? So this is what I'm doing. This is the IB low. So this is the next trade, and this was posted at 10:14. This is before this rotation, okay? So I'm anticipating. In the Trader Lab, we have, remember, structured trades. Now, I'm below this, and I have 60, remember? So this is our next structured trade. It's called the IB continuation trade. This is a short I took. Now, why? Why? We broke below 60, tested and broke below, so on the shorts. So let's take a look. So how do you trade this? This is the structured trade, but in the profile, this is called a low volume node. Let's look at what this really is. This is a consolidation, and we're rotating. If I come to the outside edge, and what creates low volume? This is another concept, and I can't give you everything, obviously, in a short time I have to visit with you, but there is a library of webinars. In fact, yesterday's, it's public, it's out there, and it's also available in the Bookmap Discord Trader Lab community, which, of course, is a no-cost community. And it's called, what is it called? Deep Dive Auction Magic, something like that. And you can see the magic of the auction. And it's a deep dive, and I posted it yesterday. So, it was deep dive, see the magic, something like that. And if that's available, guys, could Stephen or Dan, can you please post the link to that in YouTube for the visitors? Because I think if you want to see what I'm doing here with a little more, as I referenced yesterday, how we used yesterday's behavior and the logic behind it. And of course, today's a big change, so we have to turn the barge around. So this is a short. Let me show it to you. So I took this trade, and I have to tell you, every time I put a trade on, I'm afraid. Nobody's going to admit that. Why am I afraid? Because I'm wired emotionally to avoid risk. I'm wired not to see if there's a saber-toothed tiger behind a tree. I'm wired so I feel, because it's generated by my primal wiring. So if I'm telling you I feel fear, I'm being honest with you. Now, I've learned over the years that I can manage my fear by having statistics and understanding what a statistical edge is and probabilities. That gives me something tangible or a metric that I can hold on to. So when I open my trade plan to this specific trade, I know I have a probability of getting here. Why? Let me show it to you again. What creates this behavior? You see this here? When we accelerate, the market didn't do business here. In other words, when it goes chop, 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 it's auctioning. Too high, too low, what do you think? I'm out of here. Then we do this. There's no volume in here. Now, there is volume, but it's low because we didn't consolidate. It leaves a gap in the volume. So that gap is called a low volume node, and it's out here, and it is created by that. So if I counter rotate, which is what this is, and I come out here, and this is my structured trade here, and this is called the low volume node, I have alignment. So what do? I sell it, and I'm fearful, right? Right. So this is my outside edge. And the thing about Trader Lab and levels is there's no precision in any of this. They're areas. So there's nothing precise. And that makes it harder for us because we want certainty. You guys are doing multiple indicators and time frames trying to create certainty. I understand. We all want it. It doesn't exist here. Casinos don't have any certainty, and yet they do really well. They give you the cocktails, the ticket to the buffet, and they even pay the gamblers. And they're building larger casinos. How do they do it? They're not attached to the outcome, and they're not predicting which hand is going to win or lose. They just only execute an edge, and they depend on the edge to extract the dollars over a random distribution of outcomes. Can you do that? Very hard for us to do it because that's not our thing. Our thing is danger. I'll see you later. I'm out of here. I'll catch you next time. So this is too high right here. Chop, 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 this volume. And then we left it. So we rejected this. I know this is an outside edge up here. In other words, it was rejected. Low volume is here. So in this low volume, with this outside edge, this is my resistance. And you could see it up there. So when I come out in here, this is a short. So let's look at it. This is the last trade I put on. So I come out here. I'm seeing my buyers. I'm seeing this. And I get my trigger. I'm in my area. Now, in Trader Lab, if your plan, and one of our traders posted, I didn't take it because I was waiting for this. In other words, as part of the structured trade, is to wait. And he says, I made an error. I said, but that was his plan. I said, you didn't make an error. Congratulations. It isn't one trade. It's all of them. You stay in this business by following your plan. Regret is an emotional state. It has nothing to do with your plan. And in other words, I can trade this because I understand, 45 years of trading, gives me a little advantage. But if my trade plan says it must pick the stops off in this area, and this is my resistance, and then get a short, that's what I need to do. And if I don't take the trade because it doesn't meet my requirements based on my plan, that's the path to success and longevity, not this. For me, I'm okay with it. But see, the thing with execution is you got to be very timely. So where am I going to get into this thing? Down here. And now my stop is going to be out here. VPOC migration. So this shifts, and right here I'm going, mean reversion, but it breaks below. So now I'm good, and I'm under my 60. Remember? And I have another target, but it's way out of range. This. So this is my target, and it doesn't mean it'll ever get there. It could do it tomorrow or never. Okay. So now we're going down, and I see I'm getting pretty current here. This is the VPOC migration. Now there's two possibilities naturally. When it moves lower, this is called the variable high volume node, same process. It's saying too high. And I'm going to come up soon for oxygen and look at your questions if you have them. Also, if you're in YouTube, I hope you're getting something out of this. Every day is different, and the outcome of any interaction or rotation or anything else based on the randomness and uncertainty. It is the uncertainty that gets us because we need certainty, and it doesn't exist here. Everything is different in the sense of what the market does. What I do is consistent because I can't measure. If I'm inconsistent, and the market, of course, is random, what do you get? That's nothing. It's garbage. Garbage in, garbage out. Remember that? Well, something needs to be anchored. So the casinos play games that have anchored. In other words, it's a process. It's absolutely the same all the time. Well, if that's successful for them, then all we need to do is determine that the, quote, games we play have a statistical edge. That's what the casinos do. So why aren't we doing the same thing? Well, that's what TraderLab is built on. Emulating a successful business model, not making it up, not thinking you're playing a video game, because you're not, unless you want to. And then I think you're better off going to the arcade, or even better, go to the casino and get the cocktails and the ticket to the buffet, because you're gambling. And gambling, as much fun as it is, this is not the place for gamblers, because gamblers leave their money on the table to other traders who are prepared and understand the business. And the thing that's very hard for us is we all have winning trades. Gamblers win, right? I mean, they do win. So this is where, right here, if I cross above this, then it does put this in jeopardy, because now we're back in two-sided trade. So right here, this trade is in jeopardy. So we can come back out here. And for me, that's okay. Then I've got a nice scale. I have no risk on the trade. It can come back. And now where's the stops? They're sitting right here. So if I come up out here and I get taken out of my short, and it's not a trade recommendation, I'm going to be looking again to put it back out again somewhere. Maybe here. We have another structured trade here and here. And I don't know, you see what we have here? The low volume is here. The IB is here. We can pop this. Remember, this is resistance sitting right up here. I'm looking here to move my stop, to adjust it. And I'm going, oh, where is it? There it is. Okay. Now, the first place I'm going to be looking is out here for stops to get taken. And I'm going to be looking at this volume over here. I'm going to put a little line on here because this is my resistance. Let me try to get this little thing right there. Close enough. You can see the high volume node. This is my resistance. If I come up in here, it's still not the end of the world unless I come up here. Then I'm going to be looking at VWAP and mid, and I'm going to be looking, because here's what you got. This is too high, but there's stops here. It's an outside edge. So we can get the stops. And if I stay under here, I can come, back to VPOC. So it'd be a short to there, and then maybe whatever. Or we come through here, and then I'm going to be looking at these distributions. And if I get a short, I'm coming back here. These are structured trades. And then maybe out the bottom, maybe down here, maybe none of the above. So that's TraderLab. You guys, do you have questions? I can come up now, take a look at them. Thanks for your patience. I just try to get through this so you can kind of get a sense of what's happening.
Absorption sellers volume 204. Absorption sellers volume 204.
How are we doing in YouTube? If you got questions, please post them. I'll take a look. Hey, Boomer. Good morning, Boomer Brian. Hi. what could be a sign to catch a trade at an LVN or waiting to get the stops that may be behind the LVN? Order flow, really. In other words, when I'm looking, all this stuff that happens in here, we have to think from a few different angles. For example, this created that low volume, which is what this is. So it's like an outside edge of a distribution. But the other part of that is there's going to be stops up in this outside edge, and there's going to be stops here. We can come up and test it. Take the fuel, I call it fuel. And here's where the fuel is. It's above this swing. Stops are going to be here, right? So we always got to look left. So I'm seeing sellers are starting to front run this. That's the absorption. So now, and I see buyers, I see sellers, absorption on both sides. So you got two sides interacting. The stops are here. So if I come out here, I want to see, and you see the icebergs going off here? 2,000 are sitting under here, another 600. They're selling. That's why you're seeing this. So I'm very careful here. And I don't call trades, by the way, guys. Who wants to take my stops? So let's see how this plays. And by the way, I'm showing you the Trader Lab community because that's what this is all about. This is about community. It really is. What's that? Great question. Yeah, I've missed a lot of the chat, but after the stream, this is where I hang out, for good, bad, or indifferent. 61. So the IBC scale, there's one of them, took the IBC, which was this out here, that one that I was showing you, and got a scale. Now, if you get taken out, you get taken out, and it doesn't matter. I know we are all attached. So now we're looking, remember what we're looking for. The stops are sitting up here. I'm seeing a lot of selling. You see the icebergs? This is order flow. So I have the following going on here. Let's look at the stop and iceberg detector. I'm seeing selling icebergs. I'm seeing selling icebergs sitting right there. We can see them. And I have stops, buy stops coming out. So, and only 3 stops here. So as I'm going higher, 101 stops here, I'm looking at my resistance and my stops here. So this is a suspect. So, and this is not a recommendation. I take stops, don't you? Cost of production and overhead. What I try to do, and that's all I can do, is wait for my structures and then try to read it and see if I get a trigger, okay? And I am conscious that there's stops out here and up here. So this is kind of where I want to see. And if I push through this, then my next area is going to be here. So I already know that. Now let's watch this. Sellers, stop divergence. Microstructure is there. Let's watch it. And this is where we might go. This is an IB continuation trade. It's not a trade recommendation. The thing about this is I anticipate these trades. Why would I do that? Because they're structured and they're in those 60 PDFs I share with you. Now, can you execute here? Look at all the pieces that came together. This is like real estate. Location, location, location. Absorption, absorption, absorption. Icebergs, icebergs, icebergs. Stops, short. Now, how do you get into this thing, right? You're going to have to take it over here or under here. Your stop would be here or there, and you're going for this. This is a structured trade, and it's called mean reversion. And I always like to emphasize the word mean, because the hard part of this type of trade, the same as the other short we had, last time we were over here. And let me bring you back to this, by the way, wherever it went. This. Where are the stops? They're here. Let's look at the high. See what we did? This is part of Trader Lab. You would anticipate this because if there's a swing here, retail traders put their stops here. Fine. We can use that. in the Trader Lab because we understand how the market works. We know there's stops here. Why? That's what retail traders do. I want the stops to come out. Remember, this is what I was saying to you. So I can get short to here and then hold. This is the scale. Is everybody tracking? This is Trader Lab. How you guys doing in YouTube? It's making sense. Coach, did I answer that for you? In YouTube? Good. How are we doing in YouTube? Please give a thumb up, a like down in the bottom. It's helpful. And Stephen, if you're available, could you find the webinar from yesterday? It's posted further up in the chat. It says deep dive, see the magic. And it really, I think, helps traders see how you put a complete plan together. And everybody ought to look at this. If you're visiting in YouTube, or somebody else, whoever can go grab it, please do me a favor. I don't want to go looking for it. But this is Trader Lab trading. I found, what is the thing that makes trading difficult? You know what it is, guys? Operating in uncertainty in a random environment. If we can accept we have no control over anything except ourselves, then it's all based on trade plan. It's all based on what you will do, not what will happen. So the trade from here is to here. And this is called mean reversion. That's why this is the mean. This is the mean. So outside in structured trade. Now, stop stays out here. We come back where all this selling was. Now, I always give it a couple of ticks, only because we can come back here. Let me give you some rationale on why you wouldn't put your stop right here. You could. I don't. Here's why. We had these sellers, and here's the icebergs, and we had the sellers. If we come back here and pick the retail stops here, these sellers may go, oh, really? Have some more and sell some more. And it might just be a little bit higher. And then they sell it down again, you see. So over time, I found that there's no precision in this, but we did know this was where our trade was. And we did know. So we had two shorts. We had the one out of here, which was over there. You remember. And I narrated that in Trader Lab, showed that one to you, this one. Down here and down. And then this is the same trade from a different location. Back to here. And then possibility, and it's not a recommendation, is to test the low of the day and maybe keep going. And I have an outside target over here. Who knows? And the thing about it is, it doesn't matter, does it? If you were sitting in this short, or all the ones from up above, which are, I think, 25-point trades, 30, whatever they are, I just take the trades. And I don't look at my P&L because it's going to affect me psychologically. I do have a loss limit built in that if I hit my loss limit, they put the handcuffs on me and my dome, I can't trade anymore, because if I do hit my loss limit, I'm going to be triggered emotionally. In other words, I'm going to make it back. I just need, and all of a sudden you're going down the tube. Has that happened to you? That's because of something I call Hyde, Jekyll and Hyde. Hyde's the lunatic, unbridled emotion, uncontrolled emotion. And then Jekyll's the conscious, methodical, analytical, calm. When you're in this environment, the lunatic takes over. And that's why you do things you have no intention of doing it. And it's our wiring. In the Trader Lab, you'll learn about that, because it's not what you think it is. It's much bigger. In fact, that is the reason most traders, assuming they understand the business and they do the work, fail. It's not because they can't learn the trade. I believe if anyone comes to Trader Lab, they'll leave a better trader. It doesn't mean they'll be successful, because they got to do the work and they have to master the elements that most traders can't. And that is discipline. And the word discipline, it seems we can all say it, Can we do it? Most cannot, or they have to work very hard. I think you can learn to do it. It took me a lot longer than I thought it would to become disciplined because I didn't understand how to get discipline. I thought discipline was willpower. Willpower is not what creates discipline. What creates discipline is statistics, numbers. In other words, an emotional state you can't touch. You feel it. But a statistic is tangible. You can touch, hold, feel a statistic. You can have a trade plan that shows you a statistical probability for taking the short here and the probability of getting to there. That's all you need because that gets you risk neutral. That means a minimum 2-lot configuration. 1 lots, not so much. Why would we trade a 2-lot minimum, by the way? And this is what I recommend in Trader Lab. And of course, everybody determines what they're going to do. It's not up to me. Why would you trade a 2-lot? Well, if you have a statistical edge of getting risk neutral, it gives you the ability to manage the lunatic, hide, the emotions, which are constantly in play in your head. The voice in your head, oh, I'm going to get stopped out. You see a rotation, you bail out. If you were risk neutral because you had let's say, a better than even chance, and let's assume it's a 60%, well, whatever it is for you, 60%-ish or something probability of going from there to there, that would give you the courage to know that you have a positive expectancy of at least getting risk neutral. So you don't have to move your stop. You don't have to micromanage, and you give this thing air because there is a harmonic or a rotation in this. Now you're not moving your stop and you're calmer because the worst that happens is you scratch your trade. Do you think that's a good strategy? And here's the other part. When you're opening your trade plan, your trade book, which is what you do in Trader Lab if you're serious, because you're not playing a video game, you know under these conditions that you have enough range because it's qualified and that we're now rotating or consolidating here. And don't forget, if we come back out here and the trade will be over. If we don't come back out here, then we're coming here and maybe lower. That's what I know. That's all I need to know because I can't predict the future. I can wait for my trades. And when I open my trade plan, my book, and it's like having a small encyclopedia, if you know what those things are. If you remember them, they were like Encyclopedia Britannica. You need a car to move these things. Had everything in there. And, before Wikipedia, right? So if I know I have an edge here when I open my trade plan, it gives me the courage because now I have something tangible. It's called a statistic. What gives the casinos the courage to keep playing the games even though they pay the gamblers? Statistics. Are we any different? That's what Trader Lab is about. It's not the hot indicator or the only thing you need. That's all. I'm going to use a very generous term. Nonsense. And I'm thinking something different. So leave the nonsense for somebody else. There's all kinds of marketing out there. The only thing you need, come to this chat room. How I made $1 bazillion in 4 minutes. It's all over the internet. All these quote influencers and quote gurus. If you've been there and done that, I'm going to suggest don't keep doing it. Unless you want to, of course. I found, for me, I coined a phrase called Trader Groundhog Day because I used to use indicators and, back in the day, I started in 1980, indicators were new. So I thought the Holy Grail had showed up. It was just the right indicators, right time frames, and everything would be wonderful. And you'd get winning trades with that, right? So, and that's why I did a webinar called Trader Groundhog Day. Demo Trader, thank you so much for posting it. Is that the webinar from yesterday? Guys, if you're in YouTube, get that link that's in there. Just grab it and save it on your desktop. Oh, Ned, thank you. Thanks, Ned, for pinning that. Ned's our custodian, librarian, and is very generous. Let's all give Ned a thumb up and a hug for doing all the work on curating our library and keeping things organized. Thank you, Ned. Awesome. And Stephen, thank you for posting that in the chat, in the YouTube. Guys, if you're in YouTube, Fred, You took the short, huh? I freaked you out. um, Remember, you got to follow your plan. So we're still short here. This is short. There's your scale. Now it's just helmet time. And here's the other part. If this trade comes back and takes us out and we scratch it, is that a success or failure? In my book, it's a win, because the job is to follow the plan, not the outcome of any unique interaction with the other participants, because we don't know. So the casinos don't know either. So how you grade yourself in trading? If you're focused on P&L, that's not really where it is. If you have an edge, the P&L takes care of itself. If you execute the edge, that's how I grade myself. In other words, I follow my plan. And if I have a losing day, which I do, or I hit a loss line, which I have, and I do, look, let's just be real. And why would that happen? Well, either Hyde is in control, and I've lost my control and I'm making errors, which means I haven't followed my plan. So that's a negative, and that's terrible, because that's how I go out of business if I keep doing that. Or I followed my plan, and the market condition and my plan were not in alignment. And I'm still following my plan because it has an edge. But if I take a certain number of losses before, I get in alignment, and by getting in alignment, it means that my plan and the condition of the market are synced, then I'm going to be stopped by my loss limits. And then I have to go and look at my plan and my trades and say, well, did I follow my plan? If the answer is yes, I have to celebrate it, because it's just a random distribution, because the edge shows up. Now, emotionally, we have a different attachment, right, to this. We feel, all the things, regret, anger, frustration. That's all emotion, because we're attached. Now, this is so important. I spend time on this in Trader Lab because it's the last thing we think about. We're thinking about our P&L. I get it, but that's not what this business is based on. P&L comes as a result of preparation. Here's the volume. This is yesterday's, and it's available on YouTube. Deep dive. See the magic. And it was magical yesterday. Why? We're just following a trade plan. And this is the library of webinars. Thanks, Ned. You would come into Bookmap Discord Trader Lab community. There's a link in the bottom of YouTube. And you would be able to access these and a lot more. This is just partial. Okay. There's a primer webinar, which gives you a high-level overview of this. And then there's a whole bunch of topics in here, from trading in fractals, CBAS, if there wasn't a retracement. I'm not sure the question, CBAS. You could clarify that. Are there valid targets below the low a day? Yes. I have this, 33. Now, the thing about this target, we never have to get there, today or ever. This is the beauty of randomness. I like to use the term clueless, and I use it because it keeps my mind open. I don't get rigid. Clueless doesn't mean ignorant. It means maybe, I don't know. When you're in a random environment, you really got to embrace uncertainty and randomness. It is so unnatural for us as humans to participate, to actually do this business, CBAS, I narrated it. Watched it. No, there was not a retracement to the microstructure. You had to be very tuned in here. I think it was there. So let's look at this. Here's what I was narrating on the way up. I was saying, okay, I've got my sellers here. I got my buyers here. I see absorption. As we're coming up, look at the absorption. You see the change here? You need to stop an iceberg detector to kind of tip you off. And then I see the selling icebergs up here. My resistance is here, okay? This node up here. My outside edge is here. And let's go back to the previous short. Who's saying they didn't get it? Because we didn't quite come to the location. So this here, you have to look over here. You always got to look left. Everybody write that down. There's going to be stops here. So if I come across, now I'm in mean reversion, and this is the location. And this is my low volume node, which is based on what happened, further to the left. So this is an outside edge. And if I come back up, I'm taking these stops out. So when I take the stops, when I'm coming up, I'm seeing the absorption. But I can't get short because of this. I want them taken out. And now I'm at my location and I've got my absorption. Now let's look at how you get into this thing, because now I got all the pieces. Now, yes, we did not have a chop chop. We had the break high, break low. So right here, I am looking at it. So this is a tough entry. You might not be able to get in there. But this is how I see this. Right here is my seller's absorption. This was support right here. That's where my buyers were. When I break below this, let me show you. Now this gets, I don't want to use the term advanced, but when you're developing, you're not necessarily, because you really got to be ready. Let's look. The buyers are here. So look, buyers are here. See the microstructure, break high, test the volume. Buyers are under here, going up. Chop, chop. Buyers are here, going up. Here I see my sellers, but I haven't taken the stops, I don't think, yet. Come up here. I see more sellers. Going higher. Resistance is here. What happens here? I break here. Where was my buyers? They were here. Right there. That's why you see them here, but my sellers are interacting here. Break low. So this is, you got to take this on the run, which may not be your thing. Your stop will go up here, and you're looking for a scale here. You got to have enough range, and then you're hanging out. Your scale is here. You could take it, or it doesn't fit, and it's not your trade. You just hang out. And to go lower, we got to get under this. Right now, we're holding this, and if we can't get below it, then we're going to squeeze these guys, and then this trade will be over. That's that. And where does this trade fail? The micro high volume is right here. You see the little nodes sticking out? In here, chop, 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 break high, break low. It's very hard to get on this trade. I'm not saying you should be on the trade. It's not for me to say. I can execute in this, but I'm going to get filled in the hole. But the trend is down, and I got this. As long as I got range, I'm going here. So it's really a judgment call. But your stop's going to have to be up here, or at least over this, but over here, you see. So it might not be your thing. Now, if we rotate up, now this might be too low. This is what this is, retail. If it's too low, then my resistance is going to be out here. And then I have to, if I have my risk off, my stop can be wherever it appropriately is to scratch, then I'm just going to sit there and just take whatever comes. So, and this can do the following. It could squeeze out and come back up here. And remember, where's my next trade? If I get inside of this, I'm going to be looking up here and mid and VWAP. If not, so that's it. This is just one trade. There's no way to know. So I just take them and take my stops or get my scales and get scratch or whatever. Just do it. Because I can't predict, Anybody who can predict that we would stop here, is very informed, because I don't know how you can. I do know what it means, and I know this is the high volume for the day so far, and it's a retail price. If the participants think this price is too low, and this was too high, and it's now too low, and I come back across here, I'm just going to take these guys out. The trade's over. But it hasn't failed until we get above here. And then again, next trade's out here, either VWAP or mid or none of the above if I don't get a trigger. So we'll watch this. Questions, guys?
Volume 100 absorption, sellers volume
JT, the early morning chart is generated by Investor RT. It's my higher time frame software, and it generates them based on, and I can't show them to you today. They're in yesterday's. Uh, there's some webinars that I think suggest all of you visiting either in Trader Lab, in the Bookmap Discord Trader Lab community if you haven't done it, or in YouTube. And these are all available to you in the Bookmap Discord Trader Lab. There's no cost, by the way. There's really maybe 5 right now that are recent that I think you'll find very useful. Notice where we came. Okay. There's one that's called pre-market planning, number 1, number 2, number 3. So it's pre-market. How do you put the plan together? Yesterday's, which I posted a link, or Stephen did, thank you, I believe, in the YouTube, is yesterday, because that goes into the higher time frame setup, if you will. How do you plan for the day? And that was yesterday, and you guys will see that. You should watch that, and that's in YouTube right now. There's also one on something called VPOC migration. That's the early trade you saw me take, the initial shorts. It's a very aggressive structure, but it is not where traders start. It's where traders start training their mind to develop unconscious competence. So I put a few elements together. And of course, there's 60 PDFs of these trades. As you guys know, probably if you've been here, you know what they look like, all this. And what you're seeing me do here is in here. But it's not a course, because when I did these, there was no intention. I was just doing this to help other traders. The idea of streaming was the last thing. I'm a full-time trader, so but I can't trade when I'm streaming. I do manage my trades. I can do that, but to actually try to concentrate, I can't do. And initiate. But this is what I do in my own trading. This is what I do. I'm not saying it's the best thing on the planet. I'm sure it isn't. But it's simple, because I believe it's transferable. I used to think trading was complex. And the thing was, get the right indicators in the right mix to get certainty. I spent my years trying to create certainty. And it took me a long time to figure out that everything works sometimes, but there's no certainty. Okay, well, then what? And how can I get more certainty? I've realized there is no certainty. There is probabilities. Probabilities are not certainty. They are random distributions of an edge. I had to change my thinking, so I put my energy. Notice where the resistance is. Back to here. See? This is called mean reversion. This is structured trading. So if you didn't get this, you could. Now, let me go a little further with this. Where's the outside edge? Let me bring it back just so you could see this. Now, these are not trade recommendations, right? I'm going to try to edit this thing, hopefully not make big trouble. You never know with this stuff. It didn't work. Let's try it again. See this outside edge is right here? Right here? That's the outside edge of this, which was the basis for the short. So when we come up here, let's look. I have resistance. I got my icebergs. I have my buyer. What do I have here? I'm taking you down in something called fractals. Now, it's after the fact, but I want you to see structure. So this is my resistance here, or yeah, resistance. And I don't know. We could, we go anywhere. What do I see? My buyers are here, and right now it's going to the moon. My sellers take over. This is a trigger. So right here is my micro high volume structure. I come back and test it. My stop can be here, not a recommendation. I come back. Where do I come back to? Here. The structure. Now, either the following is going to happen. It's going to keep going, squeeze out the shorts, right? Or we're going to hold this area or this area and come here. That's the trade. Let's see what happens. So what I do is I'm using, remember, volume profile. I'm using the volume, this, which is coming from over here for the test. There's the line. Then if I get my seller, I'm going to look at the volume right here because this is the most recent interaction between buyers and sellers. And the sellers won. Where was my, it's like the shootout. It's right in here. That's too high. There's my seller. Now this is resistance, and there's my stop. And then where am I going? Here. Not a trade recommendation. You don't want to take my stops. But this is Trader Lab. This is trading, and whatever happens, happens. Can you do this? Here's the better question. Can you learn it, and do you want to learn it? And if you learned it, would it help you? Now, let's go back to indicators. I understand. So believe me, been there, done that, more than I care to think about. And in many different ways, even trading systems. All right. So indicators on steroids. And the other part of it is everything works sometimes. That's the other part. That's what creates this, I know I just got to make it better thing. I did a webinar on something called Trader Groundhog Day. You should watch that one. See if it's you, because it was me. So there's, again, here's some selling. Icebergs. Stop at iceberg detector. You know, all these things come into play. And it's not like you have to have these things. But when I came over here, was it useful to know that it was being absorbed? I think so. Is it useful right here to see that there is an iceberg selling? There's icebergs sitting over here. Is it useful? I think so. Let's see what happens here. And I'm going to run out of time. I've only got 8 minutes. So if you got final questions, if you're in YouTube, please post them. Please give a like. And don't forget to grab the link that's up in there. It's a deep dive on this process. I did it yesterday. And of course, if you're in the Trader Lab, this will be available exclusively to Bookmap Discord Trader Lab participants to review, reverse engineer, screenshot. How do you get better in this business? You got to do work. Nobody can hand it to you because there's a psychological alignment that needs to take place. Now, for me, I'm kind of inclined to go for the larger rotations because it's a risk-reward thing for me. So it changes how I experience take stops. So if I'm getting 15, 20, whatever it is, whatever the market offers, or 10 or whatever it gives me, offers, because it offers, it's not up to me, and I take 2.3 point stops along the way, I have a great day. When I shorten my range down, and I don't think high time frame, I'm then starting to take the ratio, risk reward, and I'm compressing the range, but my risk stays constant. How does that come out over time? Do you know the answer to that? Many of us think, and I'm not saying right, wrong, there's no judgment here, that percentage of wins is what this is about. It's not. This business is not about percentage of wins. It's about edge and yield and expectancy. That's what you got to measure. So a lot of traders think if they're short term, they actually have better odds. Well, but the risk reward then gets skewed against them. So I've and a lot of traders, everybody in Trader Lab does their own thing. There's not a right or wrong, but the only way you kind of extract the answer is finding the alignment with your psychology, your groove, if you will, and the range. Because some traders cannot handle the fact that we had a short here and we got this and now it's come back. They're going to lose their minds. For me, I'm going to, if I take a trade, I want to get risk neutral or I take a stop. That's as deep as it is, And I know where my next trade is. If I come out and take this out, I'm going for VWAP and mid. That's it. I took this short, which is the short, then back here. If I have another one out here, then back here. If I don't get back here and it comes up here, I'm out of the trade. This is as deep as trading is. Questions? Final questions. I got 5 minutes, and please give a like if you're in YouTube. And there's a link down in the bottom if you're inclined. There's no cost to come to the Bookmap Discord Trader Lab community. Notice where we are. Just saying. Oh, and do I know this is going to stop here? No, I don't. How about that? Nope. Remember I said I'm clueless, but not ignorant. I'm not ignorant. I am clueless. Still going for this. Has the trade failed? Nope. Would you have bailed out here? If you don't have statistics, yes. That's the difference. This is the business of trading. And I know I probably sound like a broken record to you guys, and I apologize for that. But there's one thing about the trading business that I think you need to understand. You need to be consistent so you can measure it and not be buffeted by the emotions, the fear that makes you make decisions to avoid the saber-toothed tiger, which is this, when you already know where your level is, so you don't bail out because you're going for this. Please give that thumb up in YouTube. Subscribe to the free Bookmap, by the way. There's a digital version. You can access that at bookmap.com if you want to play with Bookmap and you haven't touched it before. There's also a lot of additional education available at no cost in the Bookmap Discord server. Stocks, options, crypto, order flow, market maker behavior, algorithmic behavior, and a lot more. Swing trading and all of it, and it's all available at no cost. And your path to that is through the portal, the door into the Trader Lab. And there's a link in the bottom of YouTube, and you can access it. And there's currently no cost. Hopefully it'll stay that way. I've been doing this for a number of years, and I can tell you the Trader Lab is a serious community. It is not romper room. There's no holy grail. By the way, if there is a holy grail, come on, bring it, because we all would like the holy grail. But in the meantime, 65. My stop, I'm getting a question about the 65. This is where the stop needs to be. I mean, above here. I think that's the question, right? Thank you, Ned, again for curating. And where are we trying to go with this thing? So this is a short there. This is a short if you're inclined, and your stop would be right up here. I'm okay with that. Are you? Are you all right risking 1.5 trying to get here to get risk neutral, put a few burgers in the hopper, and then lower the day and lower or not? Again, that's like, I don't know. You see, can you say, I don't know? And then can you operate in, I don't know? It's so contrary to what we emotionally and psychologically need based on our primal wiring. That, my friends, will get you. And if you come to Trader Lab, you can do better, in my personal opinion. Please give that thumb up. I'm out of time. Join the Trader Lab community. There's no cost. There's the library of webinars and a lot more, plus 60 PDFs of these structured trades that I do share that you can take, reverse engineer, and start seeing all these behaviors. And then you need to codify them, find your groove, what fits for you. There's all different kinds of traders in Trader Lab. Position by position, I mean larger rotation traders, and then we have traders that get down into the with the micrometer and the electron microscope. You could do anything as long as you know it has a statistical edge, in my opinion. Thanks, guys. Thumb up, please, on the way out in YouTube. Use the link in the bottom of YouTube if you want to visit Trader Lab at no cost and access all the other education in the Bookmap Discord community and server. And the other part, of course, is grab that link in YouTube up above, and it is all about yesterday's behavior and how we did a deep dive into auction market theory using the volume profile, market mechanics, and seeing the beauty of the auction and how, without any indicators, if you understand how the market works, you might actually be able to create longevity in this business and a potential career. And of course, past performance is never indicative of future results. You got to do the work. Come to Trader Lab. Check it out. Take care, everybody. Have a super day. In Trader Lab, I will be joining you in the lab.